Hello everyone, it is Evan from the Trade Risk on Wednesday, August 26th here with a market recap video. And in this video, we are going to exclusively analyze the current state of the market. There are no setups, at least from my perspective, trading breakouts, looking for momentum, tight ranges, tight bases. They don't exist right now given some of the recent action. So I'm not going to go into all of the individual names that I usually do, only because they all pretty much look the same. So we're going to spend some time analyzing the S&P 500, the IWM, and the Qs. So this is the daily chart here, and you can see, of course, unless you live under a rock, you know that we broke down heavy selling last week and into this week, and Monday, of course, was the big down day right here. So we're below 198.50. We're below what held as our support for most of 2015. So we basically traded to new yearly lows, and this is where we're at right now. And you can notice, before we zoom in on the smaller time frames, you can notice that the fast moving averages, so the 8 EMA is this light blue line, 20 period EMA is the yellow line, are racing lower. So we have a market that is very extended away from its fast moving averages. By most metrics, the S&P 500 and lots of other names are still very much oversold, even despite today's almost 4% snapback. But let's look at some of the shorter time frames. Before we do, though, just want to make a note here. As we talk about the daily time frame and swing trading in general, we are completely flat. We have no trades on right now. It just doesn't seem like a environment that is very healthy for swing trading, at least not yet. We need more time to sort of settle in and see what happens and what develops out of this range right now, or is there more downside to come? That's what we're sort of waiting on. And I mean, the big thing I just want to put out there for especially the newer traders out there, in times like this, you really need to make sure that you're aware that the environment has changed. There's been a big shift in sentiment, and it's important to realize that what we had, last week, the market we had last week, is not the same as what we have this week. So there's been a big breakdown. Look at the average true range, how it's been accelerating to the upside. It's now at 4.41 for the S&P, for the SPY ETF, and that's up from basically $2 as it's been for most of 2015. So there's been a large expansion in the ranges, and just be aware of that, of course, as you're trading, if you're day trading or any type of trading, really. You just have to understand that things have shifted just a little bit. Now let's look at some of the shorter time frames here, and let's talk about what we have going on. So if we look at a 5-minute chart of the S&P 500, of the SPY ETF, this is pretty much what we're looking at here. Seems like we have a pretty clear-cut 188 to 195. So those are the extreme levels as of right now. It's only been 3 days of trading in this range, so it's going to need some more time to develop. We want to see it fill in here, but this is more or less where we can expect bounds to be right now, and where some natural support and resistance would lie. We also have 193, which is just a level that has based price has either found as support and based on, or found as resistance and fell off from. So 193 is just sort of a interesting point of control on the shorter time frames. And what we'll note today is that the S&P 500 was up almost 4%, and look where we closed. We're right back here at the top end of this range. So while we did have a very impressive session, I would still preach sort of caution here as to chasing this rally. Of course, we can have continuation tomorrow, we can V-shape, and we can start to repair damage, and I would love to see that personally, because it would get us back into a swing type of environment even quicker. But because this is such freshly damaged charts in general, and just this action in general, I would be hesitant, and I would almost want to respect this top end of this range. In fact, I think even aggressive users could be shorting the close here, just given how much it ran up today and seeing it run back into this previous resistance. Now, I didn't short it, so I'm not advising to or anything like that, but it's just sort of an idea in playing with this early stage range. So that's sort of where I'm looking at right now. I'd like to see this range develop. I'd like to see just more sideways develop, let those moving averages catch up, let some of these charts heal up, and get those ranges developing nice and tight again before we can get a resolve in either direction. And I think that's what would get me more interested on the swing setup again, is to see some of that action unfold. As of right now, though, there's zero interest to try and pick to try and hold exposure overnight. If we go to an IWM, we look at the small caps here, you can see the similar range here we have drawn. So 109.60 to 112.50 is the immediate range that I'm watching. You can see we closed right on it today at the top end of it at the close. So I think tomorrow will be very interesting to see if we gap above it. Maybe this isn't a real substantial range that we should be looking at. Maybe the market's got some other plans in store for us. So that's what's sort of interesting going into tomorrow. If we look at the Qs, this broke through the top end of what was holding as resistance on Monday and Tuesday. You can see we closed strong right around 103, 102.50 or so were the highs from the past 2 days. So you can see we're already sort of breaking out of this range. So perhaps this is going to morph into a bigger range, or maybe we just overshot on the close today to the upside, and we could see a gap down tomorrow. Who knows? But those are sort of the immediate levels I'm watching. They're pretty much the only levels that we have to go off of. Otherwise, you could go back to a daily chart and start to redraw some of those prior lines. And if we look at the Qs, for example, 105, this was the big level on the upside. So maybe we are just going to beeline to retest that level, that breakdown level, if you will, tomorrow or later this week. Same thing goes for the IWM. Perhaps we want to get back up to 115 and we're going to just get an immediate retest of that level. And if we look at the SPY, maybe 198.50 is in the cards for later this week. So that's basically where we're at. Damaged charts all around, oversold conditions all around. So you have a very real sort of tug of war between the bull and bear case here. I think there's a lot for everyone, and I think this is really a day trader's market, and this is the time to sort of to definitely manage your risk, tighten up your process in general, and basically just slow things down and enjoy what's left of the summertime. So that's what I'm trying to do right now. I think that's pretty much everything I wanted to talk about in this video. As setups unfold, if I do start to find some setups, I'll definitely be posting those. But for now, I think the environment certainly favors the shorter term traders out there right now. So hope everyone is navigating this well. Thanks for watching as always, and I will catch you next time.